Hello, everybody. We had rough technical issue, but we were with you now. It's Wednesday, and it's a special one. It's January the 6th, so Happy New Year to everybody. We are ready to usher in a 2021 that is somewhat um, less eventful, but it doesn't seem like we're going to have that. However, we want to thank you all for being with us today. It's a lot of news going on. There's a lot of stuff that you could be diving into. Hopefully, this is a little bit of a reprieve for anybody watching where we can just talk about the stock market, how to grow our investments, and get away from the madness just for a few minutes out of the day before being covered by all the media that is out there. For everybody for 2020, we want to thank you all for sticking with us. We have reached episode roughly 34, 35 in our podcast. The fact that, Amazon did recognize the podcast as being, useful to people to hear, that was amazing. And it's because of the listeners. You all have been sharing the podcast and you all have been listening to it actively because we see the stats. So for anybody who isn't aware of the podcast, it is www.ieapodcast.com. You can find us, and if you want, you can say, Alexa, play Investing Education Podcast, and we should come on. So we're going to dive into the 7 most anticipated IPOs of 2021. There are more than 130 or so IPOs slated to hit the market in 2021, but we're going to talk about the 7 most anticipated. So it's a great time for you to share it. It's a great time for you to kind of tell your friends, you know what, let's get away from that madness and just listen to something that can make our lives better for a little bit. And Leon's going to tell you why we chose this topic while I do a little bit of housekeeping.
Yeah, so just get a little background. So 2020 was the biggest year for IPOs in the history of the market. That shows how, the market's been around. Let me say, for as long as they've been recording IPOs. It was the largest, the most number of IPOs to go out in the history since they've been recording IPOs. Last year, there were 480 IPOs in 2020. Interesting thing is that this year, now we're only on day 6 of 2021, and there are already 138 IPOs scheduled to go out this year. So that's roughly 30% of all the IPOs last year, and we're only in day 6. So there were 480 last year. We're on pace right now to blow that away. Now, will it happen? We don't know. We'll see as the year goes on. That could be it. There could be a lot more, or we could, it could stay where it is. But the fact that we're at day 6 of the new year and we're already at 30% of last year's IPOs that are scheduled to come out is huge.
Yeah, you're talking about $85 billion in assets raised through IPO in 2020. That's incredible.
Yeah, huge. And I think it was our podcast last week where we covered the new rule surrounding IPOs, so which is called the direct listing. And just to give a quick overview of that, that's basically where companies now will be able to directly list their shares and raise money on the exchanges and be able to bypass underwriters. Why that's good for us as investors is because now we don't have to wait till the whole thing gets that whole, usually when it comes out, it gets a big pop. And then we usually buy that pop price. We miss out on that big gain. Well, with the direct listings, we'll be able to buy the actual IPO price. So the price comes out, they list the IPO at 60, we'll be able to buy it roughly at 60, not have to wait till it comes out at 100 and then get in. So direct listings are going to be huge, potentially huge in 2021, as well as SPACs, special purpose acquisition companies, are another new way for companies to go public that benefits us. Because between direct listings and SPACs, companies can go public very easily now, and we don't have to wait a long time for them to come out. So it really increased the pool for us as investors to get into new companies. Today,
and also for everybody who's been like requesting us to speak to your groups, family members, and the such, we're pretty much booked for 5 events in January already, one of which is already 2 have already occurred, 3 are forward looking, and we've just been booked. Today, we've been requested to speak for the HBCU, the Biz Network. And so all of the requests coming in to spread this information to more underrepresented investors is awesome, because I don't know how many of you all even have, are familiar with SPACs, what, Leon was talking about just now, or the new regulations around IPOs, and there's new regulations around accredited investors. So there's a lot happening in the stock market right now that can work in our benefit if we know what's happening and if we know how to position ourselves while it's happening, and also how to educate ourselves on it. So hopefully, you all are joining IAA, and this isn't even a plug for, Investing Education Academy as a business, but honestly, you need the information. We need to get the information to you, because only by getting information from a credible source are we going to be able to utilize it and grow. And this is totally off topic, but today I got a text from one of the people who about 4 years ago started kind of learning about investing with Leon and I, and through our ecosystem. I got a text today that person's brokerage account is at 231% rate of return. And of course, it's not guaranteed. Stock market is risky. We're not telling everybody just dive in, but that's not even something that's even possible in a bank account. And the person contacted me, sent me an email, a screenshot of their account, because they were like, they can't believe it. And they're so thankful they actually got started. And so for many of you all, you're thinking like, how do I get started? It's too late. The market's already grown. Last year was a lot of the growth. I'm already, I can't get in. The prices are too high. It's not true. So that's it. I just had to say that.
Yeah, not at all true. And just to piggyback on that, so as Brent said, this person had a 200 and some odd percent return. Now contrast that with the savings account, right? Savings accounts right now save on it, or they're paying on average 0.05% interest rate on average in the United States. In order to double your money at that rate, it would take over 1,400 years. I'll say that again. The average rate in a savings account right now is 0.05%. It would take you on average, it would take you 1,400 years at that interest rate to double your money. Where Brent just said, this individual has already doubled their money in I don't know what, a year or two. Yeah, several times. Yeah, so, I mean, yeah, that's but so several times over. So yeah, that's why we're such huge proponents of the stock market, because it's the greatest wealth generator in the history of mankind. And for us as minorities, people of color, African Americans, what have you, we really, really need to start getting more involved in this, especially in 2021. And that's why we're here to bring this information to everyone every Wednesday at 9 p.m.
Yep.
So, all right, back to the topic. So, and Brent, if you can pull up slide 1 when you get a chance.
Yep.
So as Brent said, we have the 2 rules of SPAC. So if you want to, if you're not familiar with SPACs or direct listings, if you go to our YouTube channel on YouTube, just search Investing Education Academy, or if you're part of our membership, just go to topics, then IEA TV, and go back and just search for SPAC and direct listings to go back and watch those podcasts. But they're 2 really, really important regulations that have changed in the last year or so that's really going to benefit us as investors. So up on the screen now, we have the chart of the top 7 most anticipated IPOs of 2020. As I said, right now there are 138 that are scheduled as of today. That number will most likely change. And kind of the point Brent and I made last year, that there were 408 last year. Most of us don't even know about 99% of the ones that went public last year. We just know about the snowflakes, the Airbnbs of the world. We have no idea what the other 478 are. So, and right now, of the 138 that are scheduled to go public, I looked through the list. I didn't recognize 98% of them. Yeah. These I know about. These are kind of household names that a lot of people listening to this and watching this will know. So that's why I pulled these out and just kind of doing research. These are pretty much the most anticipated to come out this year. So let's go through it. So the first one is Roblox. And I'm kind of excited about this one because this is what got my, because of Roblox coming public, I got my sister and her husband to I found out they had my nephew's money in a savings account, and I completely berated them for that and got them to get rid of that account, move it to a Robinhood account. And the first stock they're going to buy is Roblox for him well, they've actually already bought Amazon, but he's excited. My nephew, who's 10, is excited to buy Roblox because he plays Roblox every day.
Yeah, the kids love Roblox.
Yeah, Roblox. I got a special place in my heart because it kind of got my nephew or got my sister to move their money out of a savings account into a brokerage account for my nephews to invest. So Roblox, this year relative to last year, had $588.7 million in revenue. That was a 68% jump over revenue in 2019. So
Roblox, Roblox, we get messages in that some people, Attorney Beverly Winstead, actually her niece is excited and going to get Roblox when it comes out. And
Yeah.
I wanted to give a shout out real quick to Attorney Beverly Winstead in particular. She started an investing book club with her nieces and family members, and she's some of her colleagues in business. She's for Christmas, she actually bought my daughter the book How to Turn $100 into $1 million. And the first book club meeting is coming up on Saturday. And my daughter's already read like 3 chapters in, so she's like super excited. So just shout out the fact that people that is starting to become normal in our ecosystem is amazing. And Leon and I always continue to push that, we don't want this education just to stop at the parents or grandparents. We want you to go, talk to your kids, and then also we talk about minorities all the time, but we have plenty of white people in Investing Education Academy, and we want the information to go to those who normally wouldn't get it, to receive it and do something with it. I mean, we're fans of good people. And that, I mean, like if no one wants to know where Leon and I stand, we are fans of good people, period. Now, the reality is minorities have been left out of this information, overwhelmingly so, over the years. We're talking about a group that's just now caught up to white wealth as it was in 1962. But that does not by any means mean white people are bad. So, I just want to be very clear in our position, and also the reason why Investing Education Academy exists. And getting these texts from you all, we appreciate it. We really do. And I know I'm jumping way off, Lee, so just bear with me. But for those who are sending in texts like, I just did 70. We got a text that somebody did 70% last year. Somebody in our group did 70% last year. That 70%, like that was their return in their investment last year in their brokerage account. Then to get this text this morning that somebody's up 231% in the last, 4 years, over a 4-year period, it's kind of awesome. And now, book clubs are starting. Leon, you said one of your friends, was it Lynette? Her son is doing a book club, or he has a investment club? Somebody started an investment club.
No. That was that's Jason. I remember Jason. I don't know about a book club, but he was getting his son was getting his friends involved with investing, because he was investing himself, and his son, I think, is maybe early teens. And he was getting his friends into investing too. So getting that younger generation, excited about investing.
Yeah. So I'm just really excited that you all show up and you're sharing these videos. And it's bigger than Leon and I. It's bigger than the stock market. It's really about changing generations. And we've already done it. Their generations, their families whose generations will be changed because of this information. So if we stop tomorrow, we made an impact, but we want to make a deeper impact. So we urge you all to share, invite people to Investing Education Academy. It's IEAmembers.com. And, these 7 anticipated IPOs, let's talk about it offline. You're like, let's go deeper with it. But we do that in our ecosystem. So, I broke up the rhythm a little bit, but everybody listens to the podcast. We want you all to understand too, like just who we are and what we're about. And we're going to make 2021 an amazing year. We want as many people to be a part of that as possible. And so even from a standpoint now, every Wednesday after we do our lives, we're going to have a debrief on Clubhouse, where so Investing Education Academy at some point we'll get a room where we're just talking, we're doing a debrief. So if somebody wants to find us over there after we do our Facebook Lives, we're going to talk more about what these companies are and what they do and how to position yourselves to be a part of it.
Yep. Yeah, cool. So Roblox is the first one. And like I said, I'm really excited about that one, because it's getting my nephews involved in it. And as someone said, Brent, I think he said Beverly said that, she has, her family is too, her kids and her family are too, which is cool. So the next one is Affirm. Affirm, so what they do, Affirm is interesting. This idea is kind of clever. Some ways I think I like it, in some ways I don't. So what Affirm does is they extend credit. It's called point of sale credit. So it's like if you go to Amazon and want to buy, I don't know, a TV for $2,000. Let's say you don't have the cash at the time, you don't want to use a credit card. Somebody like Affirm, there'll be a little button there that says, like Affirm or something. Click here for buy now, pay later. What it does is it puts you on a payment plan, right? So you would so the TV cost you $2,000. You would click on that. You go through the process with the firm. They would set you up, and then you would pay, an installment every month towards that TV. Now, some of their, I guess, quote unquote loans are interest free. So it wouldn't cost you anything as far as, just paying the actual amount. And some of them do have interest. And I believe that it's based on your credit. So, of course, the higher your credit is, you may not have any interest at all. If you have, worse credit, you may have some sort of interest rate. So that's Affirm. So that's what they do. And they had $509.5 million in 2020, which was a 93% increase over 2019. Huge growth. Next is Coinbase. Now, Coinbase is interesting because I believe they're the largest crypto brokerage, if that's even a term in crypto, the word crypto.
I think wallet. I think they're considered
wallet. There you go. Right. Yeah, they're the largest wallet company around crypto that's out right now. You just go to the App Store, type in Coinbase, download the app, and you can trade. I mean, just about every crypto coin that's out there is on Coinbase. Now you can't actually trade everyone that's on there. There's only like 15 or 20 that you can, and I don't know why. I'm not a big into crypto, but there are a lot you can trade and there are a lot you can't. But there's a whole plethora of information on Coinbase about the different cryptos they offer. Coinbase has 35 million users in 100 countries. So they are a huge player in the crypto space. Their revenue
advantage.
Because I think they've been around since 2012. And like I said, I'm not the biggest crypto investor trader, so I don't really know what long wallets have been around. But I know they're pushing 8 to 9 years now. They've been around as far as the wallets. They've been around pretty long time as far as the crypto space goes. Next is Robinhood. I just mentioned it earlier. Oh, go ahead.
Oh no, I want to see what you're gonna say about Robinhood.
Oh, so I mentioned Robinhood earlier. I got my sister to open a brokerage account for my nephews with them. I love Robinhood, and Brent hates Robinhood, and he can tell you why he hates him.
You always go extreme. Why do you always go extreme?
Because every time you bring this up, you're like, "Oh, it's Robinhood."
I hate him.
You literally okay. You do not like Robinhood. Hate maybe strong.
Yeah, like you go extreme. Yeah. It's people that
don't. Brent is not a fan.
There you go. That's it.
Okay. So Brent's not a fan of Robinhood. All right. So I love Robinhood because one primary reason is they're the reason that commissions are no longer in the stock trading brokerage industry. They single-handedly changed the game. Before them, these brokerage firms charge these commissions anywhere from $7 to $10 when you bought and when you sold. So you paid it anywhere from $14 to maybe $20 round trip for the whole transaction. Now you don't pay anything. There's no cost as far as commission. Now, Robinhood does have a lot of issues, right? So they recently just paid $65 million to the SEC to settle a lawsuit, which is valid. I mean, like they've got their hands slapped quite a few times by the SEC because they've done things that are a little, some would say unethical. They haven't broke the law.
Underhanded. Underhanded would be the word.
Underhanded, misleading. Yes, I can't argue that. Just real quick, so the reason what happened is that we don't pay any commissions with Robinhood, but the cost you pay for the stock may be a slightly higher going through Robinhood than say going through like a Cash App or a TD Ameritrade. And there's reasons behind that, and that's the reason why they got their hands slapped by the SEC. They've lowered that cost of the trade. No, but I do want to say that cost will be cents, like a few pennies, right? So if on TD Ameritrade you paid $50.60, on Robinhood you may pay $50.62, right? It's not in the grand scheme of things, not really a big deal.
But you're talking about billions of trades, billions of transactions.
I agree. No, I mean, yeah, you're right. I mean, it adds up over time. But I'm saying for us as the individual trader or investor, it's not really a big deal. Paying 2 cents more for a stock versus $7 in, $7 out. So I would say over time it can add up, but generally I think it's a good thing personally. So
I still say this, Leon, and I'm saying this publicly. I still think you like what Robinhood did, not who they are. And yes. So no,
I mean, yeah, you're right. I mean, Robinhood has done some pretty unscrupulous, misleading things. However, another reason I like Robinhood is because they brought in serious liquidity to the market. And what all liquidity means, they brought in a whole ton of new traders. And I'll just give a quick stat is that Robinhood right now has 13 million accounts, brokerage accounts. And they've been around since 2012, I think. Whereas you have like TD Ameritrade, which before Robinhood was the largest brokerage account in America, and they only have 11 million accounts. They've been around 40 years. So Robinhood has brought in a huge number of new traders into the market, which benefits us as investors, traders, because that adds liquidity. There's more buying and selling going on, adds volatility, and that's attractive to other companies that want to IPO because they see there's going to be demand for the stock. So Robinhood, yeah, I mean Robinhood has done some bad, but they've done some good too. So I'm a fan of Robinhood for the good that they've done, and they're being slapped by the SEC. So a lot of stuff they did in the past that was wrong has changed. And so for their numbers, they did $180 million in 2020, which was 100% growth from 2019. Sequential growth. So that 100 million was in the second quarter of last year. So in the first quarter of last year, they grew revenues by 100%. So they had about 90 some odd million in the first quarter of last year, and then the second quarter of last year, they doubled that to 180 million. So just phenomenal growth.
For me, Robinhood is like the monster that scared away a bigger monster, but it's still a monster nonetheless. And so in Robinhood too, the thing you should know as an investor, the average person, they signs up for an account with Robinhood. Robinhood's lifetime value of client or customer for that person who gets a brokerage account is about $800. So from that skimming, this, no big thing, you're talking about $800 per person and you have millions of accounts. Other issue that I have with Robinhood is the fact that for the considering that most investors are novel investors that come to Robinhood's platform, they have a lot of indicators, and they were gamifying the investing experience a little bit, and that can lead somebody down the wrong path. Now I know what Leon's thinking. There's the company that called us who wants to do some work possibly with Investing Education Academy. The whole platform is about gamifying the stock trading thing, but they aren't dealing with real money. And so, but that's a whole other conversation. Let's not even go there. But for Robinhood too, the fact that they're giving these indicators and they're putting out this information to entice a person, I think they still do it. Like they're top buys, but most brokerage firms do it. But the way they go about it is, it's not for me, it's not research based. It's essentially like they're showing you their thoughts for the day, and people tend to go just with their thoughts blindly, which is creating this Robinhood effect. And the more experienced investors, are more sophisticated investors, are literally watching the pattern of what is deemed a Robinhood investor, and they're trading ahead of them or behind them, but essentially they're letting them take the punch to the face, and then they're walking. And not in all cases, but in enough cases where it bothers me. And then there's no 1-800 number. So if something's moving real fast and you need information, especially as a new investor, you can't pick up the phone and just call them and get somebody on the phone that can help you understand, percentage tracking stock or trade. And you're like, what is a percentage tracking trade? Like, I don't know what that is. And so you can't just call somebody and ask. And unless you're going to wait for the email to come in, you're losing time. And so for those reasons, I'm not the biggest fan of them, but I appreciate what they did for the market. I appreciate fractional shares. Madison, totally agree with you, but I just wish they would do, operate more honestly and have greater access to getting in touch with someone to help new traders, because they know they're targeting new traders.
Yeah, I agree that the 1-800 number is an issue. I definitely agree. They should have, I mean, as big as they are now, they should definitely have some sort of helpline or call center set up. I agree with that. And I agree with you also that they've done some bad things. And as I said, they're being dealt with now by the SEC. So some things they did earlier have changed. Some things they're working on to change. So that's Robinhood. Next one is Petco.
And also, I'll say this too, though. My last little point. With everything being said, I'll probably buy into the company.
Me too. Oh no, that's no doubt. I mean, just last one on Robinhood. Their average investor, the age of an average investor on Robinhood is only 35 years old. So they have a good 30, 40, 50 years worth of clients in their pipeline. Whereas the legacy ones like TD Ameritrade, Schwab, their client bases are in the 50s, 60s, and 70s. So Robinhood is where the future is of investing. So I'll definitely be buying Robinhood when it comes out personally.
Yeah, and I'll say for Robinhood and Coinbase and like a firm, I think in some point in the future, competition for all three of those in one company is going to be PayPal. I think PayPal is going to touch on all three of those companies in the next 3 years. They're going to have a hand in what all three of those companies do.
Yeah, they kind of are now, because you can buy crypto and you can buy stock. One thing they haven't done yet is offer payday loans or whatever they are. Point of service loans
is limited. Their crypto is like It's the three primary coins, and that's it. Ethereum, Litecoin, and Bitcoin. You can't do any sub coins. So they haven't fully gotten into that marketplace. But when they do, the infrastructure is so ready to expand. I mean, that's a vertical for them. So vertical integration for a company like that is going, I don't think it's going to stop any of these companies from being fantastic. Let me say that. But I do think in the next 3 years, you're going to see PayPal position themselves very well to have a piece of each of these three subgroups in their primary business model.
I think Square's Cash App also will be that like that at some point. The competition. So next one is Petco. So a lot of people, know Petco. This is not a tech company. It's not a new company. Petco. I even want to say they were public before at one point and got taken private, and now they're coming back out. I'm not. Don't quote me on that, but I think that may be the case. But it's a pet store. You buy food, you buy food, you buy doggy treats. We all know a pet store. It's Petco. A lot of people have those and have been there and seen those. They are last year they had revenue of $3.58 billion, and their revenue growth was 9% over. So that's in 2020 versus 2019. So solid growth. The pet industry is going through the roof, especially since COVID. A lot of people have gotten pets because everyone's kind of lonely at home. And even before that, the pet industry was one of the fastest growing in the U.S. regardless. Next one is Instacart.
But real quick, Petco. Petco's also done a vertical with being what do you call a house for pets? What do you call it?
Like boarding?
Boarding. And they have the Petco insurance. And so they're getting a piece of all those insurance policies. So I forget who they sell it through, but they get a piece of everyone that goes out. And then their Petco has partial ownership in different veterinarian franchises in the US. So they are getting money greater than just in the store. So just know that.
Okay, good to know. That's part of that 3.58 billion.
Oh, we got a question. Pet healthcare. Yes. Pet healthcare is very real. And you're talking about I don't know, I think it's anywhere from $60 a month up to $400, depending on the size and exoticness of the animal. In addition to that, a pet's surgery can be equally as expensive as any human surgery. So, and many pets have surgery quite often, which case the owners are utilizing their insurance to cover the cost. And pets get cancer, tumors. I mean, pretty much everything we're supposed to, pets are too. So with your question, pet hair question mark, yes, pet healthcare is very real. It's very expensive. And if a pet owner can get insurance, a lot of them have it.
And just real quick, a friend of mine, her dog had surgery 2 days ago. He had eaten something, she had eaten something, and something happened. So she had to have surgery. That cost a friend of mine $3,500 out of pocket because she had no pet insurance. And now I believe she's thinking about looking into pet insurance because that was a $3,500 hit out of nowhere. So pet insurance is definitely real, big time. Yeah. And so next one is Instacart. So Instacart is a grocery delivery service. So they'll you go on the app, pick your stuff. A concierge, I think as they call it, will go to the store, pick up all your stuff, and then deliver your groceries to your house. So Instacart is huge. So their that's not really valuation. So their valuation this year so far, or end of last year, was $17.7 billion. And the valuation, it doesn't tell you much about the business itself, but it tells you about how the market values the company and where the market thinks the company can go. So if you look below that, the next one is Nextdoor. So Nextdoor is it's like kind of like a community app where neighbors discuss things. They're like, it's been huge since COVID, since no one can meet up. A lot of associations go through Nextdoor. It's just basically a neighborhood app. You see like crime rates, you see homes for sale, a whole lot of stuff in Nextdoor. But you see Nextdoor's valuation for the company is $4 to $5 billion. So what that shows you is that the market sees higher growth in Instacart relative to Nextdoor. So the valuation just kind of doesn't give you revenue or profit numbers, because I don't know if either one of those companies have released those yet, but the valuation would give you an idea of which one the market perceives to have higher growth going out in the future. And right now that's Instacart over Nextdoor.
Yeah, so for me, if I had to pick, I would pick Nextdoor over Instacart personally. Instacart is a stay-at-home stock. And when we move into the recovery stock space, I don't think Instacart is going to stay as vital as it is right now. And next door, as communities come out and start moving about, people are going to start talking online about what's happening in the community, because next door does a lot. You're talking about it. Next door has absorbed like some of the services of a Craigslist, some of the services of a neighborhood watch. It's a data hub.
Right.
Like, forget community, they are a data hub. And what's going to happen is all these retailers are going to start wanting the data that Nextdoor is keeping, because it shows them what they can sell. For Instacart, the data that they're receiving is held by the grocery store already. So it's not new information. It's literally the convenience of somebody bringing it to you, which I don't see. I just, if I had to pick between the two, I pick Nextdoor, even though the valuation is 17.7 billion. Just my thoughts.
Yeah, to me, Instacart is kind of like DoorDash that went public a few weeks ago. I mean, the CEO of DoorDash said in their prospectus, or the S1, that the vaccine and basically the COVID recovery, us kind of moving past COVID and kind of going back to normal life, is a threat to their business, because right now they're seeing such huge demand because everyone's at home. And what DoorDash does, they're a food delivery service, so you can order like McDonald's, Dairy Queen, whatever you want, whatever restaurant you want, Wendy's, whatever you want, you can do it through DoorDash.
Yeah,
They see Dairy Queen. Yeah, I don't know where that came from, dude. I don't know if those are even around anymore to show my age, but but you can order whatever you want off of DoorDash. And the CEO said that a risk to their business is COVID essentially going away, because they'll see less demand. And I think Instacart will be the same way, that they'll see less demand once we kind of get out of our homes and go back to normal life.
Yeah, and I don't see them having a big vertical that they could turn to, or even a pivot. Like, I mean, you deliver groceries and you're not producing the groceries, you're not manufacturing anything. The data that you're gathering is already held by the grocery stores. I don't see their play long term.
Yeah, I mean, to me, it's just a service that should be owned by a grocery store. Like around here, Giant, we have Giant, and they and before that, it was a company called Peapod. That Giant, which is the same thing as Instacart, they're a grocery delivery. Giant bought them to be Giant's own grocery delivery. So to me, that something like Instacart should be part of an existing grocery chain. But they see an opportunity to go public right now, so they're taking it.
Yeah, and then they're competing against Uber Eats and just so much DoorDash, so much competition for that. When we go into the recovery stock phase versus the stay-at-home stock phase, I just wonder what their legs will look like. So,
right. So real quick, on this list, what will be your top 2 picks?
From this list, switch up. So I would pick Roblox, and this may shock you, but I probably would pick Petco.
Nah. I mean, the pet game is real. I mean, like you said, with the whole insurance thing, for me, I would do Affirm, and it'd be between Roblox and Petco, but I'd probably go Affirm and Roblox. And the reason I do Affirm is because anytime you're in the business of charging interest to people, that's a great business. And Roblox is gaming. We know gaming runs the world, and it's gaming for kids, which is grabbing the whole next generation of gamers. So that's why I picked those 2.
Well, that goes in line. That's in alignment with my pick for today. So I can go first if you like.
Good segue.
Yeah, it was great.
Yeah, it really was.
Okay, so my pick for today is Billy. Is Billy. So we had a meeting not that long ago with our course creation consultant, and she brought up Billy. And then it came up again when I was recently talking to a gamer, and he was like, yeah, I'm really trying to get on this platform. And I was like, platform? What do you mean? He's doing some work in China, and long story short, it kept coming up. So I was like, let me look at this company. So Billy Inc. is ticker symbol BILI. Again, it's a Chinese-based company. They provide gaming and also entertainment. This is where it's different. They provide gaming engagement, but also general entertainment that is digital. So digital entertainment to the Chinese marketplace, which is one of the biggest marketplaces for entertainment in existence. And so they are well positioned to kind of gain some traction there. And you're talking about the market cap for Billy is $36 billion. That company is not going anywhere anytime soon. And again, I'm gonna say that $36 billion. So I am very interested in seeing what happens as the Chinese marketplace. It seems like it's kind of exploding right now. And the EV space and entertainment and gaming, all these things are making the world smaller. So even though it is a Chinese-based company, you're going to get a lot of engagement from people all over the world. So your clients are the world at this point. So my pick again is Billy Inc. Ticker symbol BILI. It's currently trading at $105.60 per share. Is up 3% today. Yep, I'm in it for the long run. So I'm not looking for a quick turnaround. I'm not looking for a quick pop in this. I just literally want to see where this company goes over the next like 5 years. Because even though gaming has always been in our ecosystem, it's changing now. Gaming is becoming the platform by which people are doing research to understand how to better educate our children. They're using gaming for hand-eye coordination and frontal cortex cognites. Like this gaming has changed, and so it's just going to continue to change. So I am a fan of gaming for that reason.
All right, so my pick is Booz Allen Hamilton.
What?
Ticker symbol BAH. And full disclosure, I used to work for Booz a couple years ago. So today they closed at $88.69, up 2.34%. The reason I picked them is because back on May 6th, I picked Accenture, ticker symbol ACN. And since that day, since May 6th, when I picked Accenture, they're up 46.32%. Booz Allen is in the same essential business. They provide technology consulting to the government and to private sectors. But both these companies, Accenture and Booz Allen, have big, huge government contracts, a huge government business. So a huge business being governmental that's not going anywhere is growing. Like I said, Accenture, which does basically the same thing, is up 46% in about 5 months. That actually kind of led to why I picked them as well, because I saw how well I've done in Accenture. So I'm just kind of jumping on a similar company. Their revenue over the last 3 years has grown at an average of 8.73% on average per year, and their profits have grown on average of 23.2% over the last 3 years. So
wait, Leon, did you talk about the dividend?
Well, no, I haven't said it yet.
Okay.
What is that showing the dividend at?
On 1.4%.
Yeah, that's right.
That's like
so, and also
400 times the banks right now.
Right, exactly. Yeah. So the Booz Allen pays a dividend of 1.4%. As Brent said, we say it's like 400 times what the bank is paying. And so no matter what the stock does. Now, typically I like to choose stocks that have dividends at least 2%, but that's if I'm looking for a dividend play to kind of get that yield. Typically I'll pick those for stocks that don't really move that much. But this isn't that. The dividend I get from Booz Allen is just gravy. I'm looking more for the stock appreciation. And as I said, Accenture, a similar company that I picked in May, is up 46% in 5 months. So Booz being a similar company, I think you can do the same thing, in roughly the same amount of time.
Leon, let me ask people who are watching, what would you do with the dividend? Are you going to do a dividend reinvestment plan, which is a drip for those of you all who are watching or listening? Or would you take the dividend, use it to buy Coinbase?
Well, no. Okay, so I would no to both. No, I would not do a dividend reinvestment plan. I'm not a fan of drips. And for anyone who's curious, a drip is just where the dividend that I would be paid would automatically be reinvested in the same stock. So if I owned Accenture and I got a dividend paid by them, that dividend would just buy more of Accenture stock. As I always say, I'm not a fan of drips. I prefer to get the money dividend myself and then choose what stock at that moment I want to buy. So no, I would not buy Coinbase. I would not do a drip. I would look for, as I always do, whatever best opportunity fits my methodology and buy that with the dividend.
Yeah, so I just wanted you all to know what a drip was, because we get into these rooms and we hear people throw around these terms like, oh yeah, my investments are all in drip plans. My strategy is to compound my stuff. It's crap. A dividend reinvestment plan just means that the dividend that they normally would pay out in a cash check, they actually just buy a fractional share of the stock. the reason some people love it and some people don't, some people are middle of the road with it. Every time you get that check or that amount comes out, normally quarterly, and you get that fractional share, now that fractional share and the initial amount that you bought are bringing in new dividends. And so now you get another dividend, it buys another fractional share to add to the already existing fractional share, which is added to the principal amount that you bought. And then you get another fractional share and it's added to that fractional share, which is added to that other fractional share, which is already plus the original amount that you bought. And then it keeps happening. And it just keeps happening over and over and over again. So what happens is the dividend checks begin to get bigger in most cases, not all the time, because as we saw in the COVID environment, the market pulled back. Businesses that were paying dividends were in a great position because they had excess cash to control. Businesses that weren't in a dividend paying position, they were normally looking at getting loans or cutting staff faster than those companies that pay dividends. So dividends give companies a lot of leeway to kind of manage their business in troubled times.
Yeah, and typically companies that pay dividends are typically bigger, more established companies. So they're typically relatively safer, because you got to remember the dividend kind of cushions your losses. Because you have a dividend that pays 3% and the stock loses 2% for the year, well, that means you just netted 1% because you still got that 3% dividend. So dividends help pad losses and boost gains as well.
Yep. So for everybody who wants to join us to have some more of this banter over on Clubhouse, you can join us. We'll be there about 10 o'clock or so. Just look for Leon. You gonna set up the room? You want me to set up the room?
You can set
it up. All right, just look.
Or should I?
Just look for Brent Simpson or Leon Noble when you get in there.
Yeah.
You'll probably see it. We're gonna have the same title. The top 7 IPOs for 2021. So just look for that title inside of Clubhouse at about 10 o'clock. You'll find us there. We normally get a couple people pop in and just have a cool conversation, and then we head out after about an hour or so. So for everybody who's just getting in, Leon's pick is Booz Allen Hamilton. The ticker symbol is BAH. Is currently trading at $88.69. My pick was Billy Inc. And Billy Inc. is ticker symbol BILI. Is trading at $105.60 per share. And we hope that these stock picks do well for you in your portfolio. But as we always say, do your research before buying it. Please don't blindly just follow us because we said it. We are happy to have people, go back and fact check us, or do their own research to make sure the investments we suggest fit your suitability. And again, thank you for all the support. If you're interested in starting off the new year, learning about stock, getting your portfolio set up, you can join Investing Education Academy at www.ieamembers.com. Definitely look forward to having new members coming into January, because we know a lot of people are setting those financial goals. Having asset allocation or just being involved in the stock market as a whole should be part of that those goals. And if you're already in the market, getting additional information, getting different points of view, getting into an ecosystem where talking about investing is normal can always be beneficial. So look forward to seeing you over on Clubhouse. Look forward to seeing you inside Investing Education Academy's ecosystem. And we will definitely see you next Wednesday at 9 p.m. if nothing else. Have a great day.